Hi there and welcome back to Dukascopy TV at the start of another trading week. I'm Ben Jones. Nigeria has recently become the largest economy in Africa, and with inflation data out later in the week, Gaiman Nonyane is joining me on the line to discuss the current state of the economy. Now Gaiman, on paper, Nigeria's economy almost doubled, going from $270 billion to $510 billion. Now this is because of a long overdue recalculation, with the last one being in 1990. What does this now mean for Nigeria's economy?
Well, it's obviously helps to increase Nigeria's attractiveness to foreign investors. The fact that it's now Africa's largest economy as an investor, if you're thinking of putting your business in Africa, I mean, you first of all think about the largest economy, and it's now being Nigeria. The rebasing is long overdue, and that's largely because of a lot of dynamics that we've seen in sectors such as the services sector, in particular the financial services sector, which has grown sporadically over the past 2 decades. We've also seen a lot of growth in the real estate sector. We've seen a lot of buildings coming up, and to the point that cement production is now a major growth area in Nigeria. The telecoms industry, in particular mobile telephone industry. And so the old data series fail to capture all these changes in output, consumption, and prices. And so this rebasing gives us a more accurate picture of Nigeria's level of productivity.
So on Wednesday, the inflation rate will be released. Firstly, what are you expecting from this figure? And also, to what extent could Nigeria's new GDP data influence this figure?
I'd expect, because in recent weeks we've seen a rapid depreciation of the currency, reaching about 165. But in more recent days, it's now stabilized to about 160.9, about approximately 161, which is a good thing. And that's largely because of the central bank's intervention in the markets. So these facts are on top of the fact that the food price inflation is now a bit stable. It's now about 9.3 from 9.2%. I'd expect inflation to still remain within the central bank's 6 to 8% targets, around 7.6% in March. And going forward, I expect the slow inflation to continue because of this aggressive monetary policy intervention by the Central Bank of Nigeria. In terms of the rebasing's influence on inflation, it's early to say for now, because the rebasing took place up to 2013 last year. It's on an annual basis. But the government also plans to rebase the CPI data because it's now based on 2004, and it will be rebased to 2009. So I'd expect slower inflation growth rates in the coming months once that takes place. And so there's no direct influence, but indirectly, I'd expect once the rebasing takes place with regards to the CPI data, I'd expect inflation to be slower.
And finally, what does Nigeria's new position mean on a global scale? Do you think trade and foreign investment are likely to increase?
It would help to increase the attractiveness of the economy and provide investors with some more products. I mean, provide people with more products, because as new investors or new firms are coming up, it'll help to increase the amount of products in the market, as well as make it cheaper, provide investors give investors, businesses, the opportunities to deal with economies of scale. So overall, it is a positive measure, and also it helps to increase increase the attractiveness, in the sense that the debt indicators to GDP now appear more attractive. They're lower than what they were usually under the previous GDP data. That's largely because of the large productive base. But having said that, real GDP per capita is still low if you compare it to a country like South Africa. Nigeria's GDP per capita is still below par, what it should be, which simply just shows that there's a large income disparity in the country, and a lot of catching up needs to be done if it's going to become a more sophisticated operating environment like South Africa.
Gaiman, thank you very much for joining me today. That's all we've got time for, I'm afraid. Thanks for watching, and make sure you tune in to Dukascopy TV throughout the rest of the week for plenty more exclusive updates and interviews. Bye for now.